now. The following is a paid program and does not necessarily reflect the views of WSIC.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for tuning in with us here to the 4 o'clock hour here on Dollars and Cents. If you're a 9 to 5er, you got 53 minutes, 38 seconds until we get to the finish line here. I appreciate so much that you tuning in with us as we're getting to the end of the normalized business days. We're talking on all things financial and economic here on Dollars and Cents, presented by North Main Financial. As you know, when we talk about these kinds of things, we're going to be talking about companies. I got a whole list of them today, I promise you. We're going to be really delving into some things that are hitting your headlines and probably are topics of your conversation. We're also going to interject some kind of fun and anecdotal sort of things to keep you lively and interested here. But in doing so, nothing that we're talking about here is intended as a specific recommendation for you, meaning that even though we're referencing these things, looking at specific companies, we're going to talk about some in a positive light, maybe some in a not so positive light. Again, in doing so, nothing intended as a specific recommendation for you. All things here are done only for informational sorts of purposes. Everybody's situation is unique. We strongly recommend that you reach out to your tax advisor, to your financial advisor, or you're welcome to reach out to us at North Main Financial Group online. You can find us at northmainfinancial.com. That's north like the direction, main like the street, financial.com. We have a contact page on there. You can leave us your email address, a phone number. Let us know the most preferred and desirable ways to contact you, again, at northmainfinancial.com. You can also call us here in the studio. I can't promise you we're going to get you into to today's show. Sometimes with the number of things I got on my plate here to share with you, I can't always get to that subject, but usually we can. So if you got a particular question hitting your headlines there, something where you'd like to hear us talk about here on Dollars and Cents that maybe is really provoking some conversation, maybe even a little confusion about what's out there. There's certainly enough out there that provides some level of confusion when it comes to all things economic and financial. Call us here at the studio, 844-STUDIO-4. That's 844-788-3464. That's 844-788-3464 here in the studio. If you got some economic, financial questions, you know I can't speak into a particular recommendation for you, but if it's a general question, you want to talk about a subject matter, you want me to give you my best thoughts on it and also tell you when I don't have any particular thoughts on it, or if it's outside of my realm of expertise, I'm happy to share that with you as well. All right, thanks so much for tuning in. We're going to get to it. What's hot? And this is our segment. I mean, I used to say it's a segment. I mean, practically half of the show now we're talking about what's hot because there are so many things on the radar screen in terms of what's happening in the world today, economic and financially, understanding what's circulating out there and the kind of things that you want to keep on your radar screen. I'm going to start out academic. Don't leave me. No, I promise. Don't leave me. I'm going to start out a little bit academic. We had an inflation number tick across the screen today here this morning, and it was fairly positive, and the market took it that way. And it has to do with the prices of consumer spending or expenditures by consumers in terms of the inflation number. How much have prices increased for things that most consumers buy? Now, I'm really gumming that up with a lot of 10-cent words there to describe really what's an inflation factor. How much of things become more expensive for the most common sorts of purchases made by the consumer. And so we looked at that number here this morning coming across from the Bureau of, from the Department of Labor, and looking at how those kinds of things were hitting our radar screen. 2.8% increase. That's getting closer to the Federal Reserve's desire for inflationary figures to be closer to 2%. And certainly the market liked that. So we saw a positive bump, not only in the pre-market futures, but then also into the start of the market here today, as of the time of this live broadcast, or as of the time of this podcast, if you happen to be listening to the recording. So I think that's a positive thing. I think that's positive insofar as certainly the directive of the Federal Reserve has been concerned. It has been their express, I would call it even singular, mandate that they have put out there publicly to reduce that inflationary figure, or reduce the collection of inflationary figures down somewhere close to that 2% figure. A lot of discussion about whether they're going to be able to hit it exactly or not. There's nothing exact in a $28 trillion economy. It's not going to happen. I promise you. There's just too much going on here in our economy. But certainly they want to be able to get close to that, and it appears that the incredible increase in interest rates that we've had here, and I say incredible because historically it's never happened this much this fast, that the incredible rise in interest rates we've had here over the course of the last almost 2 years now is indeed producing the effects desired, meaning that it is reducing the overall inflationary rate. Now, what's very interesting along with that is, and we also had unemployment figures come out from the Bureau of Labor Statistics this morning, the BLS, and they come out weekly, and we get we get a series of them. Actually, there's a series of about 10-ish figures that come out. We usually only highlight 2 here on Dollars and Cents because those are the ones that most folks are watching, or to which most folks are paying attention, and it has to do with new claims and continuing claims, meaning new claims in terms of folks who are signing up for unemployment benefits for the first time, so for the first week, and then continuing claims, those folks who have been on claim or receiving benefits for longer than a week. We're still in the ballpark. We're still in that 220-ish thousand range in terms of new claims, which I know sounds like a huge number, but it's very normalized for an economy of our size. And then about 1.75, 1.8 million in terms of continuing claims. Again, a huge number, but in terms of again, an economy of our size, a working force specifically of our size here in the U.S., very normalized in terms of those figures. And if you've been a long-time listener to Dollars and Cents, and you remember back at the front end of COVID, I mean, we were looking at very different figures at that time. We were looking at 5, 6, 7, 8 times that figure, those figures, whenever we were at the front end of COVID. Very, obviously an extreme kind of time when so many folks were forced to work from home or forced not to work altogether because of the nature of their workspace and the restrictions that were placed on those kinds of spaces at that time. So yes, I am comparing that a little bit against an extreme, but also to provide some context to a normalized sort of number as well. So again, looking at those figures, surprising. And I say surprising for me. That's subjective. That's my commentary to those figures, because usually when we have an increase in interest rates like what we've had here over the last couple of years, almost a couple of years, let's call it 18 plus months, when we have an increase in interest rates like we're talking about, yes, it absolutely can impact inflation. It has impacted inflation, meaning it has reduced the rate or the amount of increase year over year for inflation in some of our most commonly held metrics. But it usually produces some other, let's call them side effects, or at least not as desirable side effects when it comes to those kinds of things. Usually the big one, you heard me talk about this. I talked about this a year ago. And again, I'll raise my hand and say, I thought we'd be in a very different place at this point when it comes to unemployment, or specifically the rate or the number of folks who would be unemployed at this time because of an increase in interest rates. And it's not purely binary, but usually with a rise in interest rates, it becomes more expensive for companies to do business, or specifically more expensive for them to borrow money. When they have increase in expenses, they often are looking for things to be able to reduce their overall expense structure. Number one expense inside of most businesses, practically all businesses, labor. So you usually see an uptick in unemployment. Haven't seen it. And we haven't seen it again as of this week. I'm going to keep pounding into this idea because it is so huge. It affects so many folks. You know folks who are affected by it. I know folks who are affected by it. So we're going to keep on this on a week-by-week basis for at least the foreseeable term. But I'm spending intentionally quite a bit of time on it here on this front end of this week's version of Dollars and Cents, because it is something to which we need to give our attention. So inflation coming down, right? So inflation coming down, unemployment remaining steady. Those are big themes when we're looking at us from an economic standpoint. I think my subjective look at it speaks into the strength of the underlying economy, and that's a place where we want to be. Well, friends, I appreciate so much. We're already at the end of the first segment here of Dollars and Cents, presented by North Main Financial. Hang with us as we go to commercial here on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
Well, staying dry as we head into our Thursday night, but extra clouds on the increase, and temperatures only dipping down into the mid-40s overnight. We'll start our Friday dry, but chilly rain on the way, arriving by lunchtime, and it'll be with us for the rest of our Friday. So your Friday evening plans will be wet, and it'll be chilly too, with high temperatures only near 50 tomorrow. A lingering shower as we kick off the weekend on Saturday morning. Then we'll dry it out. We're in the 60s for the rest of the weekend. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here's your WSIC community calendar. MuralFest is back, April 25th through the 28th at Wilkes Community College, featuring nearly 100 performers, including Old Crow Medicine Show, Sam Bush, Turnpike Troubadours, the Teskey Brothers, Nickel Creek, and more. Tickets and information at merlefest.org. Listen each morning to Good Morning LKN for your chance to win tickets. Downtown Mooresville's Shamrocks and Shenanigans is on its way. St. Patty's Day is right around the corner. The festival is happening in downtown Mooresville. Attending is free, but there are ticket packages available for purchase. Irish dancers, pipe bands, food, and drinks. March 16th, downtown Mooresville's Shamrocks and Shenanigans is on its way. For more info, visit downtownmooresville.com. Coin collectors, get ready! The Statesville Coin and Currency Show is coming to the Statesville Civic Center March 16th and 17th, featuring over 60 tables of some of the finest coins around. For more info, contact Bill Brewer of Carolina Prospectors in Statesville. The Statesville Coin and Currency Show, Statesville Civic Center, March 16th and 17th. Want to see a Tyrannosaurus Rex? How about a Triceratops? Dinosaur World Live is coming to Kane Center for the Arts, Friday, March 29th. That's not the only fun family adventure coming to the Kane Center for the Arts. Dinosaur World Live, Friday, March 29th. For tickets and to see the entire spring lineup, visit canearts.org. That's CAIN arts.org. Have an event you would like to tell people about? Visit WSICnews.com and click on events to submit your event today.
Now more of Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us into the second quarter football reference. Yes, sir. That's what I'm talking about, Producer Bill, because we're probably, let's see, we're about at the end of, actually, we are literally at the end of February right now. So we're about three months and some change from camp. For it. So, I mean, I'm counting the days. And we got to be less than 100 days at this point, I got to imagine.
Yeah, I'm going to check that out.
Yeah, we can't be too far away. Now, for you baseball fans, I'm not saying that all of those sports are bad. I pretty much love all sports that are out there. Except for pickle, I can't even say that. I mean, I was going to make a joke about pickleball, but I'm pretty sure that the lights on the phone would just go off the chart here. I do like pickleball. I haven't played a whole lot of it, but I do like pickleball as well. But for baseball folks, pitchers and catchers are in. I mean, we're going to be into spring training. We're going to see games on television here before too long. And I know for you folks in the North and in the Midwest, that's a little hard to believe right now because I know you're still sitting through some frosty temperatures in that end of the country. But ready or not, especially for all things that have to do with Cactus League and Grapefruit League kind of stuff, we're going to be seeing spring training here for baseball before too long. But I appreciate so much you hanging with us here on Dollars and Cents presented by North Main Financial. We're into what's hot, are those kinds of things that are hitting your radar screen, hitting your headlines, the kinds of things that you're watching. I got a little academic on you in the first segment there. I admit it. We've got to touch on that kind of stuff. We got to talk about inflation. We got to talk about unemployment because even though you may not necessarily be paying attention to that on a day-to-day basis, I promise you it literally affects all of your external financial decisions in one way, shape, or form. It really does. I mean, whether that's with regards to your employer and the amount that you're compensated through your employer, if you're a business owner and the cost of doing business, if it has to do with if you are hiring somebody or if you're an employee and you're looking to be hired. All of those factors come into play that we're talking about there. So that's why I spend some time on it, but I appreciate that. We're going to pivot here. You know, we get a little bit anecdotal sometimes, but this has to do with all things financial, and we're talking Whoppers. And when I'm talking Whoppers, I'm talking Burger King Whoppers. Now, I'm not talking about Whoppers in terms of, well, it is a big sandwich. I mean, Producer Bill, I mean, are you a Whopper fan, Burger King Whopper fan?
Absolutely.
I mean, I am too. I mean, it brings a little nostalgia. Not that I want to get too far into the past because there's most of those things I want to forget. But in terms of my college experience, I remember buying Whoppers. There was the local Burger King where I went to school. Local Burger King would have special sometimes $1 Whoppers. That shows you how old I am. $1 Whoppers. I mean, that was a reason to go to work.
Yeah, you paint a pretty picture yet again. Yeah.
I mean, and I can also say with absolute certainty, as one who did this many, many times, that Whoppers do not keep well in the refrigerator. let's say that when those dollar specials came out, I may have bought more than one.
Right.
I'm not going to describe how many because the gluttony accusations will be accurate, but I may have bought significantly more than one. And then put them in the refrigerator and or freezer. I tried out several different things.
Right. Methods, yeah.
Yeah, and none of them worked. Those did not hold well.
I'm not mad at you for trying that.
You know what? I'm giving my best shot. Anyhow, the reason why we're talking about Whoppers here, actually, I'm going to bring in another firm. By the way, Burger King, owned by Restaurant Brands International, ticker symbol QSR. Not a recommendation to buy, sell, or hold QSR, but it's important that you have that context here with regards to Burger King. But Burger King came out, so you probably have heard. And if you haven't heard, I'll go very quickly. Wendy's, so another fast food restaurant, came out with a fairly, was it controversial? Can we say that, producer Bill?
Yeah, that's a safe way to put it.
I think controversial,
Yep.
right? I mean, in terms of modifications to their I don't even know if it was just drive-through menu, maybe the entire menu, but anyhow, invested a significant amount of money into their menu displays that would allow for, and I'm going to call it this because I don't have another way to describe it, surge pricing, or they called it dynamic pricing.
I like that.
For
Right.
dynamic pricing for their food items on the menu. And of course, the world of the internet just took off
Absolutely.
with that. Thinking about
Not going to let that slide.
I wouldn't either. I mean, I completely understand that and empathize with that kind of thing. Anyhow, the feedback was exceptionally negative to the extent that Wendy's and their CEO, so Wendy's through their spokespersons and through their CEO, came out and said, "No, wait a minute here. My words now, I'm paraphrasing. That doesn't just mean that the price can increase when the demand is high. It can actually reduce when demand is low." Now, I'll admit I have a fairly significant amount of, let's call it cynical expectation that there will be a drop in pricing during low demand times, but that's what they have said.
Right.
Now, whoever's running the management and PR operations at Burger King picked up on this idea, and it's fantastic. And they basically said, the only thing surging at Burger King are the flames, which I thought was wonderful. And in addition to that, they announced, and it's only good for today and tomorrow. I think it's just through the end of March 1st. If you go to a Burger King, if you make an order on Burger King through their app, through the Burger King app, you spend $3, you get a free Whopper. Again, I'll say I'm not pitching for Burger King here. They are not a sponsor of this show, and this is not me pushing for you buying their stock through QSR. But I mean, if you spend $3 through their app, now the internet said this, so I'm going to say that it has to be real. That's what the Chief Justice says. If it's online, it has to be true.
Right.
If you spend $3 on their app through tomorrow the 1st, that you get a free Whopper. Now, producer Bill, check me on that. If you find something else on the internet that proves me wrong, but I saw that a couple of different places.
No, we got about 6 minutes of commercial. I'll be back. All right.
You'll be back.
Yeah.
That's right. You're gonna make sure you hit the Burger King before it closes. I mean, so very, good for that. Good for you. Good for you, Burger King.
Right.
I mean, seriously, you
opportunity.
Just leverage up on that and take advantage of it. So anyhow, I told you about buying Burger King Whoppers in college for $1. Now you can get one for free if you spend $3 on other things through their app. So check it out. So make sure that that I'm not completely crazy and looking at that. I'm going to keep on the food theme here. We're going to keep running Beyond Meat. So now we're talking about not just the regular ground beef, but the ground beef substitute Beyond Meat, which, by the way, Beyond Meat has a contract with QSR, so they supply some of their Beyond Meat or their let's call them non-beef beef substitute kinds of options on their menus there. Beyond Meat came out here with earnings this past week. And again, not a recommendation to buy, sell, or hold Beyond Meat, ticker symbol BYND, if you're looking for it. Came out with, let's say, exceeded expectations, but they exceeded lower expectations, significantly lower expectations in terms of sales and also in terms of profit margin. Now, Beyond Meat has been a very interesting kind of company to track on my end of the world, not only because of obviously what they do and what they produce, but also in terms of technical movement of the price of the stock itself. Because I'll tell you here that in the last couple of days, it has increased. The stock price has increased about 80%. 80%. Now you look at that. Holy smokes, what a move in a given week. And you'd be correct. On a percentage basis, it's amazing. It was trading in the mid-sevens, meaning $7 and some change. Got up above $13 at the spike there whenever these earnings came out. So a significant amount of movement very, very quickly. But I have to provide some context for you. So this stock's trading now, I think around $11 a share, give or take. And meaning as of the time of this live broadcast or as of the time of this podcast, if you happen to listen to the recording. So around $11 a share at this point after it's had the big spike up and a little breather of a pullback there. However, the high, and I want to say this was fall of 2019, late summer, fall of 2019. The high on this stock, $240 per share. So it has decreased about 90%, over 90% in terms of its value since that high in 2019. Now, a couple of reasons. This is not me just trying to beat up on Beyond Meat. That's not what I'm doing here. But I do want to highlight for you how much the fortunes of stock can change and of companies can change in a given time frame. Because sometimes there is a, let's call it a mischaracterization when it comes to investing in the stock market, that if you buy companies that tend to be popular and tend to be on the, quote, likable screen, that they automatically are going to be good investments over the long term. And friends, that's just not true. It just isn't. And I'm not saying this, again, to speak unnaturally negatively of Beyond Meat, because there are many, many, many companies which would fit this kind of track that I'm describing here for Beyond Meat. But it was one of those darlings, especially it was just pre-COVID. It really was just at the front end before COVID there, at the mid to late part of 2019. And I mean, it was the darling. And there were hedge funds buying into it. It was all over the news, just pretty much nonstop there in mid to late 2019. And the stock price went on to reflect that. And so it was the one to own, or one that many folks wanted to own during that time when they were looking at the opportunities to be able to really touch on the high distribution models at McDonald's, at Burger King, at Wendy's, other entities that normally would sell hamburgers in a fast food style fashion, and to be able to offer an alternative. And so there was a lot of, let's call it enthusiasm, I think that's fair to say, during that time about that. The stock price reflected it. And boy, it just hasn't materialized. And I say that, again, not to speak so poorly of the company, but to say that the demand element just has not moved to a space sustainably that was anticipated at that time, meaning that there was a market assumed, that was part of the reason for the movement in the stock price. There was a market assumed that not only would like it up front, but would like it over the long term. It just hasn't happened. And that's been reflected in sales, it's been reflected in margins, and it's been reflected, obviously, in the stock price, as we're talking about here. So I raised that. Again, that's why I started out talking about the positive. You always do that first, right? You talk about the positive at the front end. Very glad if you bought Beyond Meat here about 6 days ago and you've been able to experience an 80% increase in the value of your holding here over the last couple of days. I'm not feeling good for you, though, if you happen to buy it, say, around the midpoint of 2019. For where we're landing right now. So very kind of interesting and very interesting. And again, joking aside, very important to remember that when you're looking at how you choose securities, how you choose stocks. Friends, it's not good just to pick the ones that are hot or pick the ones that happen to be hitting the radar screen for a particular time. It's very important to do your homework. You hear me say that a lot here on Dollars and Cents. That's intentional. You got to do your homework. You got to understand what you own, and then you have to define why you own it. Meaning that not only is it important to understand why you own it today, but is it prudent to continue to own it? Is it prudent to add more? Is it prudent to sell some? And then you look at technical analysis. How have things moved here over the recent term? How does that look in terms of historical context? All of these factors that go into play when you're looking at portfolio management. Very, very important to understand what you own and why you own it, folks. Appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. I'm going to take a deep breath here as we hear from our sponsors here on WSIC.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
Well, staying dry as we head into our Thursday night, but extra clouds on the increase, and temperatures only dipping down into the mid-40s overnight. We'll start our Friday dry, but chilly rain on the way, arriving by lunchtime, and it'll be with us for the rest of our Friday. So your Friday evening plans will be wet, and it'll be chilly, too, with high temperatures only near 50 tomorrow. A lingering shower as we kick off the weekend on Saturday morning. Then we'll dry it out. We're in the 60s for the rest of the weekend. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
I love your new outfit.
I got it at Diamond Mine Apparel and Accessories. They have a wonderful selection of ladies and men's apparel.
Where are they located?
920 Davie Avenue. Their hours are Wednesday through Saturday, 10 to 6. Diamond Mine Apparel and Accessories.
The Statesville Family YMCA reminds you that older adults and those with chronic health conditions don't need to feel they must accept impaired balance and limited mobility. Build strength, improve balance, and gain confidence in your mobility through the Moving for Better Balance program. For questions and additional information, email C. Mullins at ymcanwnc.org.
Since 1931, Duncan Heating and Air Conditioning has been serving the Lake Norman area with quality service and support. Highly trained technicians and quality American standard heating and air conditioning systems. Duncan Heating and Air believes in honesty, integrity, getting the job done right the first time, and happy, loyal customers. Duncan Heating and Air Conditioning, 704-872-2431. Schedule your appointment to service your heating system today.
This is Fred Lowry at Lowry Drug. We now have our own brand of full-spectrum hemp extract, also known as CBD oil. I personally manage this product as it was grown on my farm here in Iredell County. It was then processed and bottled here in Statesville. This is a true herbal extract with all the medicinal components intact. A product you can trust to be authentic. And since there is no wholesaler, it's at a price you can afford. Try it at Lowry Drug on Hartness Road in Statesville.
Grow in your faith with biblical teaching from the Word of God. Listen to Pastor Steve Pope from Calvary Baptist Church, Sunday mornings at 9 here on News Talk WSIC, or listen on demand at WSICnews.com.
This is a Bloomberg Money Minute. Minutes to go ahead of Wall Street's closing bell, and stocks are on track to end the day a little higher. After a measure of inflation last month rose, but came in exactly as forecast, raising expectations the Fed is going to keep interest rates right where they are for some time until inflation falls further. Right now, the Dow's up just a small fraction, but the Nasdaq up 0.2%, the S&P up nearly 0.5%. And it could close at a fresh all-time high today. Among the big decliners, those shares of WW, formerly known as Weight Watchers, those shares right now down 20%. That's after longtime board member Oprah Winfrey announced she won't stand for re-election this year. Shares of AMC, the nation's biggest movie theater chain, down 13%. That's because there were so few new movies last quarter because of those twin Hollywood strikes. And the IRS expects to reap hundreds of millions of dollars from high-income Americans who make over $400,000 a year but haven't filed federal taxes in years. Tom Busby, Bloomberg Radio.
Call now to speak with certified financial planner Joshua Dobi at 844-STUDIO-4. It's dollars and cents on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for tuning in with us. Second half here on Dollars and Cents. Appreciate so much. There we go. I know second half football reference. I'm gonna keep going with them because I mean if you're just a diehard like I am, and when I say die, I mean I'm never dying when it comes to football. But I'm not getting too caught up in it that I can't acknowledge the fact that we still happen to be very much in hockey season, still very much in the NBA season, and we're getting ready for baseball here. I mean, one of the things that's really enjoyable, if you're one who travels a little bit, boy, to get to watch a little bit of spring training baseball. If you're in Florida or Arizona, stuff like that, good to do, especially if you're going from a cold weather space to be able to do that. So something really fun to enjoy there. But all right, I appreciate so much you hanging with us here into the second half, and we're gonna pivot here a little bit. We're gonna talk about actually, before we talk about what to know, we're going to talk about an item that caller just called in on. Hope, appreciate so much you raising the question about sports betting, especially here in the state of North Carolina. And the reason why that's on so many radar screens right now, certainly it's on my radar screen, is because here in a couple of weeks, we're going to have the gates open for online sports betting here in the state of North Carolina. And yes, it is right around March Madness time relative to the college playoff, and so that I'm sure that's not coincidental for the folks who are doing those kinds of things and introducing those kinds of things here in the state of North Carolina. So you're probably, if you watch television at all, especially any sports programs that I've seen, you got DraftKings on there, you've got ESPN Bet on there, you got all kinds of entities letting you know that it's going to be coming here and allowed here in the state of North Carolina here in just a couple of days. So a lot of talk, a lot of chatter about it. So what does it mean? What does it mean with regards to, is there going to be a greater proliferation? Obviously, we have the casinos already here in North Carolina where you have the opportunity to go to a couple of different locations in North Carolina. If you want to go to a physical casino, obviously there are now going to be more sports betting opportunities there as well. So what does that mean relative to the overall structure? What does it mean for companies like DraftKings who are publicly traded and are going to be theoretically going to benefit from this kind of thing? I think it's still early in the process. I really do, because we're getting these states coming online piecemeal. So what does it mean for operations, for the smaller parlors, for the larger casinos, for these online betting entities? I really don't know yet, and I say that because it's also new. We really don't have a lot of data to be able to see. Okay, what exactly is this going to mean? Frankly, who's going to make money on it? That's the bottom line, especially when we're looking at all things financial about it, and especially with publicly traded companies tracking those kinds of things. Who's going to make money on it? And usually what happens in this kind of thing, you got a whole bunch of folks who are in the process up front, and then there tends to be some consolidation, and some folks go away, and the big ones tend to hang around. You don't have to believe me on that. Just look at what happened with things like the internet, right? We had hundreds of thousands of different entities coming through the mid to late 1990s, and a lot of consolidation and some big winners coming out of that. So a lot fewer now on a relative basis. That tends to be what happens with new-ish style industries, and I would certainly put online betting, sports betting, in that category. So let's watch it. Let's see what happens here over the next months and couple of years to see not just what the newness is, because you're going to have a lot of interest up front because it's relatively new, and certainly new here in the state of North Carolina. But what happens after 6 months, after 12 months, after 18 months, 24 months, et cetera, to be able to see what that demand element continues to be. So I'm going to watch it along with you, Hope, and let's chat about it a little bit later on and see what may be the long-term effect of having that kind of thing come online. All right, we're going to keep going here. Our next segment, What to Know. Now, this What to Know segment is really a function of just the kinds of things that we see at North Main Financial Group that are part and parcel to so many experiences. So we're using large ideas, large topics, and we try to define them, talk about them a little bit, not so much in such scientific and deep detail kinds of ways, but really just to make sure you're aware of them, that they're out there. And so today's What to Know is on small business retirement plans, small business retirement plan. So what does that mean? What is that? How's that different from a big business retirement plan? Well, if you're a small business, let's say you are an individual who has your own business, or let's say you're an individual who owns a business and maybe has a couple to several dozen employees, you are considered to be a small business in the eyes of the Labor Department or the Department of Labor. And so when we're talking small business retirement plans, what we're talking about are the opportunities that you have as a small business owner to implement a retirement plan for your small business. Now, it may be just you, or it may be just you and a spouse, or maybe you, spouse, and children. So it may be a relatively small group, or maybe you have a couple of employees, or maybe you have several employees, or maybe you have a couple of dozen employees. So there are different dynamics for everybody. Not every business is the same. It's especially different if you happen to be, say, more of a manufacturing or inventory style business as opposed to a service style business. There are different considerations to come into play whenever you're establishing a small business retirement plan. Perhaps you have employees who are W-2 full-time employees. Perhaps you have more contractor employees or 1099 employees. There are different considerations there as well. So I'm going to hit on a couple of the big ones, the ones that we see most often at North Main Financial Group, the ones that often with which we're working with clients and with small business owners. The first one is a SEP, S-E-P, Simplified Employee Pension Plan. It's often called a SEP IRA, the acronym there. And what that is, that's an opportunity for an employer. It used to be employee, but now it's just employer contributions into a retirement plan for the benefit of their employees. So with the SEP IRA, just employer contributions. Different than a simple IRA. Simple IRA, just like the name suggests, is a very simplified retirement plan, but there can be contributions from both the employer and deferrals by the employee. So very different than the SEP, where the SEP is only employer contributions in this day and age. Used to have employee contributions. That went away about 30 years ago. But with the SEP, just employer contributions. Simple IRA, you can have employee and employer contributions into it. And then you can have what's called a solo 401k, or you can even have a traditional 401k for your small business as well. Now, those tend to be a little bit more complex. Those tend to have a little bit more in terms of capability surrounding them. So because they're more complex, they tend to be a little bit more expensive to manage. SEP IRAs and simple IRAs tend to be very inexpensive for small businesses to manage. 401ks tend to be more expensive because of the reporting elements necessary with them. You need to have a third-party administrator or a TPA associated with it as well. So it's just a higher level expense, but you also have some greater flexibility. For example, just one item to keep in mind, with a simple IRA and with a SEP IRA, you are not able to borrow from your retirement plan. You can take a distribution, and if you're under the age of 59 and a half, it can be considered an early distribution from a taxation standpoint, meaning higher tax elements associated with that. But if you have a 401k, very often there is the possibility to borrow from your 401k. So that is a flexibility point or an opportunity that you have with a 401k that you wouldn't necessarily have with a SEP IRA or a simple IRA. So something important just to keep in mind, and there's a cost-benefit analysis that you do with that. If you want more flexibility, you want greater opportunity to be able to design for yourself how your retirement plan looks, well, maybe you lean a little bit closer to the 401k, but that's also going to mean an increase in the expenses or the administration of that plan as the employer as well. If you're not so concerned about flexibility and want to provide, let's say, an entry-level benefit or something that is more boilerplate in terms of how the benefit is put together, then you may want to look at something like a SEP IRA or a simple IRA for your small business. So a lot of factors, like I said at the front end, everybody's situation is unique. So it's not the kind of thing where you say, well, if you have 5 employees, this is the kind of retirement plan that you should have. No, nothing like that. It's important that you go through an analytical process, look at what's most important to you. If you're very, very mindful of the cost of the plan and the cost of the benefit, you may want to look at something like a SEP IRA or a simple IRA for your small business. If you want something that has a lot more flexibility and ability to be able to contribute in more flexible ways, but also in terms of the parameters of the plan itself, the investments that it offers, the ability to take loans from it, etc., then you may want to look at something that's more like a 401k. So very, very important when you look at that kind of thing. Also very, very important, the investments that you choose inside of the plan. You can set it up with any number of money managers or any number of other financial entities in order to be able to establish any of those plans that we're talking about, the SEP IRA, the simple IRA, or a small business 401k. But you really want to be mindful of the investments that you choose as well, because with most, you have a fixed list of the ones that you can offer. Meaning it's not true for most plans, unless you're in a 401k that has what we call open architecture, where you can choose any of the investments that are listed, say, on the New York Stock Exchange. But for most, they have a fixed list of investments from which you can choose. So it's very, very important, especially as a trustee or as the business owner or as the one who's administering the plan, very, very important to understand the investments that you're going to choose to be a part of that list. Because you're doing so, remember, on behalf of the employees. Now, you're not choosing their specific investments, but you're choosing the list of the investments from which they can choose. And that's very important to keep in mind, because you want to be able to offer, obviously, something that is reasonable from an expense standpoint, but also one that has, perhaps, some good history associated with it. No way that you can predict how it's going to be going forward, but if you're making those kinds of choices, you want to look at something, in my opinion, that has good history associated with it. Not again that that's a promise of future returns, but important to understand that style or that pattern that those investments tend to take, so that you put your employees in the best space going forward as they're making their choices about which ones to implement into that plan. So a lot to go into, a lot of considerations when you're looking at that kind of thing. Hard to do when you're a small business owner because you have so many things on your plate already, but a very important consideration. Well, friends, I appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. We're going to take a break here for just a moment on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
Well, staying dry as we head into our Thursday night, but extra clouds on the increase and temperatures only dipping down into the mid-40s overnight. We'll start our Friday dry, but chilly rain on the way, arriving by lunchtime, and it'll be with us for the rest of our Friday. So your Friday evening plans will be wet, and it'll be chilly too, with high temperatures only near 50 tomorrow. A lingering shower as we kick off the weekend on Saturday morning, then we'll dry it out. We're in the 60s for the rest of the weekend. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here's your WSIC community calendar. MerleFest is back. April 25th through the 28th at Wilkes Community College. Featuring nearly 100 performers, including Old Crow Medicine Show, Sam Bush, Turnpike Troubadours, the Teskey Brothers, Nickel Creek, and more. Tickets and information at merlefest.org. Listen each morning to Good Morning LKN for your chance to win tickets. Downtown Mooresville's Shamrocks and Shenanigans is on its way. St. Patty's Day is right around the corner. The festival is happening in downtown Mooresville. Attending is free, but there are ticket packages available for purchase. Irish dancers, pipe bands, food, and drinks. March 16th, downtown Mooresville's Shamrocks and Shenanigans is on its way. For more info, visit downtownmooresville.com. Coin collectors, get ready! The Statesville Coin and Currency Show is coming to the Statesville Civic Center March 16th and 17th, featuring over 60 tables of some of the finest coins around. For more info, contact Bill Brewer of Carolina Prospectors in Statesville. The Statesville Coin and Currency Show, Statesville Civic Center, March 16th and 17th. Want to see a Tyrannosaurus Rex? How about a Triceratops? Dinosaur World Live is coming to Kane Center for the Arts, Friday, March 29th. That's not the only fun family adventure coming to the Kane Center for the Arts. Dinosaur World Live, Friday, March 29th. For tickets and to see the entire spring lineup, visit canearts.org. That's CAIN arts.org. Have an event you would like to tell people about? Visit WSICnews.com and click on events to submit your event today.
It's Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us. Fourth quarter, we're in the stretch run here on Dollars and Cents. Yes, indeed. I know you're going to get football references. I don't care whether we're in season or not. You know that's the way it's going to be here. But I appreciate so much. 11 minutes, 8 seconds until you're at the 5 o'clock hour. And I appreciate you being here on the stretch run as you're looking at the end of your day. All right. We were talking about some things, what to know there in the last segment. Talking about small business retirement plans. Big things to know, especially if you're a small business owner. Perhaps you're an independent business owner, meaning just yourself. Having a business, important to keep in mind for tax reasons, important to keep in mind for long-term accumulation relative to savings for retirement and beyond kinds of things. So you definitely want to give some attention to that, and I appreciate so much you giving some attention to it there in the last segment. All right, we're going to keep going here. I know you want to talk markets. I got to talk about a big one here. Before we get into the markets overall, some pretty interesting news coming out of Apple. And yes, at that Apple, that one that has manufactured the device. Actually, I got two devices. Isn't that crazy? I mean, I don't have just one. Well, I have one when you can have two. I got small one and big one. Here from Apple, if you happen to be watching us on the socials here at the studio here at WSIC, but Apple came out with very interesting kind of news indicating that they were going to be shutting down their development for their driverless car, or for the Apple car, if you will. And yes, that kind of car, the kind of car that goes on a road. And I thought that was very interesting because they certainly were at the forefront there in terms of pushing the idea for a number of years. And I'll admit, I don't have all of the data in terms of why specifically. I'm assuming because they didn't think there would be enough economic value in it, or that there would be more economic value in pushing in a different direction. That's how companies make decisions. But I don't know what the particular impetus was, or what they found to be true now that wasn't true a year ago in shuttering down that. So I thought that was very interesting. Apple, obviously one of the most widely held stocks, whether it's individually or inside of funds and ETFs, literally in the world. So a very, very important point there. I don't think it's going to have a whole lot of dent. It's probably going to help earnings when it comes to Apple. So I wouldn't be surprised if actually it's a positive financial event there. But along the car end of things, I got to bring this up as well. And yes, I'm going to talk about the indexes and the economy here as well. But kind of interesting that Tesla, so producer Bill, I don't know if you're a Tesla guy or you appreciate Tesla, like Tesla.
I definitely can appreciate it.
Appreciate it, yeah, right? I mean, it's hard to disagree that they are certainly at the forefront or one of the ones at the forefront of the entire EV, electric vehicle revolution. And certainly they are quite popular, certainly in terms of their, let's call it their marketability. They're different, right? Those cars are different. They don't fit in with the normal GM and Ford style of production anyhow. So they've been talking about a roadster. So I'll call it a sports car, right? Sports car style. They've been talking about this for years. And it just came out, Wall Street Journal picked this up, that they're going to be coming out in 2025. With their roadster. And it's going to be very interesting. I think it's going to be interesting to see what the demand element is. Meaning, is there going to be a different, renewed, additional demand element for Tesla cars? I wouldn't be surprised. I mean, the Tesla owners that I know are very loyal.
Exactly.
And I wouldn't be surprised if this spurs maybe an additional purchase or perhaps even a new market segment altogether. It'd be kind of interesting.
I'm with it.
I mean,
I'm already thinking about the WSIC racing stripes.
I'm looking at the picture they have in the Wall Street Journal.
Okay,
here.
so they do have a rendering.
They do have a rendering here that I mean, it's from a number of years ago, but I mean, it looks kind of like, remember the Dodge Viper?
Oh yeah,
remember that?
Yeah.
I mean, slick, a real slick kind. I'm sure Elon Musk wouldn't appreciate me saying this, but it kind of looks like the Dodge Viper. I mean, at least that last rendering that I have here. So very, very sport car-ish.
Yes.
And so anyhow, I love the idea. I think let's talk to the chief. Let's get a wrap. To a WSIC wrap on that because the only thing, and this is just me being old-fashioned and maybe just old, but it won't have the rumble, right? It won't because I mean, it's not going to have the sports car rumble.
Huh.
You know, so maybe there's some way. I mean, I'm sure with the technology, you probably can get the rumble without having an internal combustion engine anymore. Whether it's some kind of digital replication of it.
Yeah,
somewhere.
he can fit it in somewhere.
Probably can. Even if because otherwise, I'm thinking it's a really cool looking car that's not going to have a rumble associated with it. So not that you have to, but I just think that when I think real cool sports cars, that's what I think. So anyhow, kind of interesting. So Apple getting out of the car business. Tesla, of course, keeping on the car business, going to come out with the Roadster here. Looks like delivery is going to happen in 2025. So kind of interesting. All right, markets. I continue to be amazed, folks. I really do. You heard me talk towards the end of last calendar year, 2023, looking at the markets. I thought, okay, we've had a very good year as measured by our most popular stock indices. It's not uncommon that the following calendar year you get a little bit of a breather. Well, that may happen. Actually, from a probability standpoint, very likely will happen at some point here in the not too distant future. Hasn't happened yet. Amazing. I mean, when you look at it, you look at the things that did well last year, many of them, not all, many of them have continued to do well this year. It's very interesting. We're at the 2-month mark. I mean, ready or not, we're 2 out of 12 here. So we're 1/6, you know, we're moving quickly through the calendar year already. I mean, I can't keep saying, I mean, I guess I have to quit saying Happy New Year to folks. Producer Bill, when's the official date? Is there something? There's probably something that's socially acceptable when we should stop saying Happy New Year. I don't know what it is.
Listen, I'm all for it as long as you want, but I haven't used it in quite some time.
You're much more socially astute than I am.
You made me laugh when you said that.
It's because when does it become awkward? Right. When does somebody say, "Boy, we've really been here for a long time"? Is it 1 week, 1 month? 2 months. I mean, I consider because it's still cold outside periodically. So,
I like that. I like the logic there.
You know, I just made that up. I mean, I just completely made that up. But at any rate, so as we're coming into the year, we're looking at market performance. It's tough to say that we're just getting started at this point. We're all, like I said, 2 months in to the market performance end of things, and a lot of the things that did well in 2023 have continued here to do well in 2024. So what does that mean? Well, in and of itself, it doesn't mean anything. You know that. It's a short run. We never want to make long-term decisions based upon short-term performance kinds of things, but it has been interesting to see. And so as we're looking at it, you know me, I'm a bird in the hand, kind of cautious sort of person, even on my most let's say, my most carefree kinds of days, that I'm going to say, I just want you to be cautious. I want you to be cautious about chasing the winners. And there are some big winners out there. I mean, we talked last week about NVIDIA, and this is not a recommendation to buy, sell, or hold NVIDIA, but I've been amazed at the run that they've made. Now, if you're not familiar with NVIDIA as a company, you should be. They're over the $1 trillion mark. As a matter of fact, they're going to go bump into $2 trillion here before too long if they keep going on the same trajectory. Semiconductor, computer chip style company, really at the forefront of AI, of artificial intelligence, meaning the chips that they produce being part of the hardware entities or hardware pieces that are part and function of the artificial intelligence experience on many different shapes and levels. Not talking just vehicles, or not talking just headsets, but I'm talking about all kinds of things that have to do with the artificial intelligence experience. And they certainly at the forefront, and the market has recognized that and rewarded the stock price amazingly. I've had a lot of conversations about that company here over the last couple of weeks and several weeks. What am I talking about? Last couple of years, not just the last couple of weeks. But I would just, a word of caution. Not that they're a bad company. By all financial metrics, they are an exceptionally well-run company. But there are technical realities that come into place, meaning that something cannot just increase parabolically in ad infinitum. Just can't. Math kicks in at a certain point. Law of large numbers, use whatever cliche that you would like to do that, but it just can't keep doing that. So that's just a word of caution. Doesn't mean that they're there yet. It doesn't mean they're going to crash. I'm not saying anything like that. Heck, I was the one here a couple of weeks ago saying that earnings-wise, you better be cautious coming into earnings here. Looks like, well, of course, they went up 10%, increased 10%. Yeah, well, that's why you don't, even as long as I've been in this space, that's why you don't ever make those kinds of serious bets one way or the other. But you're always cautious. And so that's really just a word there, just to be cautious about with the things that have done well. And there are a number of companies that have done well. And but then you have companies like we were talking about a little earlier, like Beyond Meat. Not good if you've been a long-term shareholder of Beyond Meat. Now, most folks probably haven't been, but I am certain that there are some folks who have been. And certainly the experience for them has literally been in the inverse of what we're talking about here with NVIDIA. So you just want to be mindful of that. That's why it's so prudent when you're looking at where the market is. It's so prudent to constantly be taking a look at what you own, why you own it. What you own, why you own it. And that changes. Companies change. Market dynamics change. Very important to keep that thing in mind. Keep that kind of thing in mind. All right, so we're looking at it here. So again, by the most popular indices, tough to argue about where things are. Now, I think that part of the market that has swung a little bit more into reality is the bond market, and specifically the bond futures, bond options markets. And the reason for that being that the options and futures markets tend to be an indication about what the market thinks on a future basis in material ways. Meaning, yes, it can be true that if something is bought up, that there is an assumption that there's going to be an increase in the value of that entity over some period of time. But with the options and futures markets, because of the ways in which they have expiration dates associated with those contracts, you can actually get an idea about what the market is assuming timeline-wise. And what I'm glad for, and I'll say it, this is my subjective look at things, what I'm glad for is that the bond market, specifically with regards to interest rates, which of course correlates directly to the movements of the Federal Reserve, I'm glad that the bond market is finally starting to come in a little bit closer to reality, I think, with what's going to happen with interest rates this year. And that's important because there was an assumption based upon the options and futures markets towards the end of last calendar year, we were going to have 7 rate cuts this year. I thought that was crazy. I'll tell you that. I thought it was crazy. Now it's down to 3 in terms of what the options and futures markets are assuming. I think we're going to get closer to 1 here before too long. Meaning in terms of what the market is going to be assuming. Of course, nobody knows until it happens, but I've been encouraged by that because we just got done with a raising cycle. It would be very unnatural, sort of a short of a geopolitical event, for things to rapidly change in the other direction. It's just not historically what we've done, and I don't anticipate that it's going to be happening here. Well, friends, we're rapidly approaching the end of this week's version of Dollars and Cents presented by North Main Financial. Real rapid recap. Again, interesting with regards to the indexes. Make sure you're making your decisions for the right reasons, and be glad you don't own Beyond Meat right now. Appreciate so much you hanging with us here on Dollars and Cents presented by WSIC.
Serving you better than ever before. WSIC, Statesville, W2.